Hi everybody, this is Lara with your daily video for Bitcoin. For Bitcoin, I want to have a look again at the weekly chart because this is really important. There was really strong resistance here, about 31,000. Prices closed comfortably above that. It's moved up to next resistance at 35,000. Looks like we're going to get a little consolidation here. We'll look at that on the daily chart. I want to note that from the all-time high to the low in September 2022, there was a bear market lasting just over a year, 54 weeks. From there, we've very obviously got now a series of higher highs and higher lows, the basic definition of an upward trend, and now we've got another higher high. It's really obvious, well at least it is to me, that this bear market is definitely over and a bull market is now underway, and I will expect all-time highs to be tested and most likely exceeded. Once it breaks through this resistance, about 35,000, I'll look for next resistance about 41,100. Now I've added this today, I'm bringing back to here. It's coming from these highs, it's tested again on these highs here, and now it's tested on these lows, tested here, somewhat tested here, and it starts to break down a little bit in most recent tests. So it's not particularly strong, but there could still be some reasonable resistance at 41,100. Now, if price can slice through that as it approaches, then I would expect stronger resistance at 48,000. On the daily chart, the last completed session comes with a decline in range and decline in volume. The previous session also a decline in range but strong volume. So price is finding resistance at about 35,000. I will expect a consolidation here and not necessarily a deep pullback to begin here unless this current session for Thursday, October 26th, can complete as a strong bearish candlestick pattern. So it's very important to see how the current session closes. If it continues in a smaller range with weak volume, then I'll expect a sideways consolidation. But if it closes strongly lower and has any push from volume, then I'll expect a deeper pullback. So this session is really important. Yesterday's session completed another upward session, but it has a decline in range and it has a decline in volume. It looks like demand for the short term has been exhausted, so we're going to see some reaction to extreme conditions. ADX is still telling us there's an upward trend, it's still not extreme. RSI is deeply overbought, so a consolidation to relieve this extreme condition for RSI would be reasonable here. And then if we see new highs, we may start to see some bearish divergence develop. I'll be looking for that in coming weeks. Money flow is now also overbought, but it's quite a long way before it can get as extreme as it gets in this market when it has a bullish run. One of my membership on my website, because I give Elliott Wave analysis of Bitcoin on my website every Monday, it's a subscription that you can get there if that's what you're interested in. He's asked me about Wykoff distribution. Now I think he was looking at a possible distribution pattern developing here, but just like a head and shoulders pattern, I would want to see this area develop and a very clear zone of support, which would be down here, develop before I would count on that being a pattern. If you're looking at a Wykoff distribution pattern developing over here, it's only about halfway done. So the pattern's not complete, so I wouldn't count on it until it is complete. But what is complete, and I'll go through this with you, is a Wykoff distribution pattern looks pretty good over here about the all-time high. So as we approach the start of this pattern, we've got preliminary supply in which volume should expand and range should increase, and that's exactly what happened here. And then you've got a buying climax which should show an further increase in volume and range. There was some increase in volume approaching the buying climax, but right at the buying climax there was actually some weakness here, but there was an increase in range throughout this event. And then we have an automatic reaction. This low of this automatic reaction defines the lower edge of the boundary, so we could pull it down here, but I'm going to leave it up here. I think that's a better, more often tested support and resistance line. During the automatic reaction, we have some increase in volume pushing price lower. So there was some strength and downward movement here. And now we have a secondary test where prices revisited the area of the buying climax. So it didn't actually get up into this zone. It just tested resistance around their area. So not the most perfect secondary test, which is why I've got a question mark on it. So this is not textbook perfect. For a top to be confirmed, volume should decrease as supply should outweigh demand during the secondary test, and range should also decline. Range definitely declined. Volume showed a little bit of an increase during this upward movement, but the volume here is a lot weaker than the preliminary supply and the buying climax volume. Yeah, we did overall see some decline in volume. And then we see signs of weakness. We see price start to fall, and here we see red candlesticks with stronger volume. There also was a little bit of an increase in range during the sign of weakness event here. And now we come to the all-time high, which is an upthrust after distribution, and it's overall having weaker volume than previous volume. So we've got quite a decline in volume up here compared to previous strong volume on the buying climax, or just around here actually, just before this previous high. And now price starts to fall. We start to see an increase in volume. This last point of supply is a feeble rally. It shows the market has difficulty advancing, representing exhaustion of demand. So during this last point of supply, we see green candlesticks with weak and declining volume, and red candlesticks surrounding it had volume pushing price lower within this. This is a really feeble rally. We do see a little bit of a decline in range as well during that rally. Now we see another sign of weakness, testing the boundary of the trading range. Another last point of supply. This rally here, volume is comparatively weak during it, but at the end, on this final candlestick, there was a little bit of an increase in volume, which was above average. But overall here, the volume is still a lot lighter than on the left-hand side of the pattern. And now we see price close below that lower boundary of the trading range, tests resistance and moves down and away for phase E. Now the big reason why I'm showing this to you and explaining how this Wykoff distribution works is what results from this distribution pattern is a trend. And this is a distribution pattern, so the resulting trend in phase E is downward. And I'm going to judge that this resulting trend is over. The prediction from the pattern is complete, because this week price is now comfortably closing back in this previous lower boundary of the trading range of the previous distribution pattern. Now, for a proper target to see, and you'd want to see if that's met, you'd use point and figure charts in conjunction with Wykoff. That's not something I have a lot of, or very much experience at all in. I don't normally look at point and figure charts. If anyone out there is able to use point and figure charts to calculate the target from this distribution pattern and to see if it was met down here, that'd be great to know. But I'm not going to do it also, not only because I'm not comfortable in exactly how to do that, but I think that the close back above the lower boundary of the trading range means that any potential target that should have been met is very obviously not going to be met. So if we want to use Wykoff to tell us that a bear market is going to continue, I think that this fairly close to textbook perfect pattern here, and the resulting prediction having been met and the price closing back into this range of the previous pattern, tells us that any predictive quality it's had has already played out. It's all done and dusted, and we're on to a new trend.